Looks like we are live. Yeah, we are live. Welcome everyone. So the first thing that I want to ask is, if you don't mind, please, those that are joining today's live stream, please type in the chat box whether or not you can hear and you can see the image. If you don't mind, just share with me that the quality is on point, and then we can proceed. I want to make sure that we're not going to have any technical difficulties. So just type in the box and let me know if you can hear me, if you can see the image, my charts. That'll be great to get started. Good morning, Roger. Hearing loud and clear. Excellent. So now that I have confirmation from Roger, we are going to get started. There is a lot to unpack today. I'm going to be essentially, my aim today, my mission is that I want to give you a bit of a glimpse into what it's like to be a professional trader trading the breakout type strategy that I promote and I teach through my mentor room. Welcome Neb, Roger, as I said. So the idea today is that you get to understand the workflow that I go through on a daily basis, okay? So without further ado, what I'm going to do first of all is show you the main order of business for today. We're going to be looking at the breakout trades that I take on a regular basis, and there's a few pointers that we're going to be touching on: multi-time frame analysis, situational awareness, which essentially comes down to capturing the chart information and coming to grips about whether or not that is a chart that fits the bill in terms of a potential breakout trade that might be in store. Then obviously we have to select the markets that we are going to be most interested in monitoring, shortlisting those markets, and then stalking for an entry. Then here in this fourth category, stalking for an entry, you're going to have to obviously first understand what is your time availability, whether or not you have you can allocate the time slots for refinements of your entry through lower time frames. And something that often is overlooked, but I would say it's even more important than the entry itself, and that is the risk and position management once we have gotten into a trade. And that is followed by consistency. Essentially it comes down to consistently wash, rinse, and repeat the exact same routines day in and day out. And last but not least, the only outcomes that as breakout traders we can accept is either we are going to be getting a big runner, a ripper as we call it, a small win, which is obviously also going to be one of the scenarios that can and does happen very frequently, a break even, or a small loss. What is going to be absolutely unacceptable is that through breakout trades we are going to be suffering a big loss. Okay, remember that if you are going to go through a string of big losses, that is really going to wreak havoc and really disturb quite massively your equity curve. Okay, so with that being said, right in front of me here we got a chart of the Solana Bitcoin. We can actually go through many markets. Now, if you ask yourself why, I mean, for those that have been following me for quite some time, you may have noticed that I have transitioned. I'm now a very active crypto trader, whereas before in prior years I used to be much more involved in the forex market. I am not by any way, shape or form completely ruling out forex in the first place, but you have to recognize where the money, where the capital is flowing, okay? And for that, you really have to capture, you really need to be aware of the macro framework and understanding where that capital is flowing, okay? It is the very first time in history that we have the conversion of both innovation in finances and innovation in technology, and that is happening in the crypto space. Also, you would be very glad to find out that Global Prime has plans in the coming months. There's still no precise or specific ETA as to when we're going to be rolling out even more crypto products. But the plan is that we're going to be having a much an expansion on the range of crypto products, and that definitely would be music to my ears, because I've been, as I said, very, very much concentrated on the crypto market. Another explanation as to why trading the Forex market as of today, as opposed to the cryptos or stock indices, does not appeal me that much, is because if you actually look at any Forex pair, for the most part, like let's just look at the pound US dollar, this is typically a nice trending volatile market. Look at the action that has been unfolding for the most part of 2021, a very choppy market, range bound 136 to 140 or thereabouts. And here, one of my premises and one of the main logics, my train of thought here is that we used to have, back in the old days, central banks with divergences in monetary policy. These days is a race to the bottom, and that makes central banks in terms of monetary policy being very much stuck. There is no divergence in terms of interest rates that are going to be paid in, let's just say, Australia compared to the US. Before, you would be paid 3 to 4% in Australia, whereas in the US that was on a decline down to the very bottom of the interest rate threshold, and that would be attracting a lot of capital into the Australian economy, and that is what really creates trends, because all that money is flowing into Australia and is leaving the US. But as I said, these days that has been, for the most part, decimated, that idea of monetary policy divergences in the first place. The only central bank that as of late has been towing the possibility of raising rates in coming months is the Reserve Bank of New Zealand, and you can actually see that there is a bit of a trend that has been developing. But yeah, so just to really leave no stone unturned, that's the main reason why I am very much focused in the crypto space in the first place. It is a very nascent technology. It is one where there's a lot of dislocation in capital, in the capital that is being invested, and are, for the most part, very inefficient markets. And the more inefficient a market is, the more that it can actually have and go through brutal movements that we can capitalize on. Okay, so with that being said, let's look into this list. I actually have these keywords and this main order of business right here. So we're going to be touching one by one. Now, first of all, you have to understand that as a trader, it is very important that you capture price information through different time frames. Okay, now I don't want anyone, and this is something that I emphasize a lot to my students, you don't have to be always fixated in the exact same time frame. There is flexibility. The markets are a gift for us to be looking at the price information through different angles. Okay, my idea of looking at time frames and the analogy that I make is that you can think about a time frame, a different time frame, the daily, the 6 hour, the 1 hour, as the lenses. As if you were to imagine you were to take a picture and you want to capture that picture from a different angle so that you are getting to have a different angle on that snapshot. So a time frame is nothing more than taking a picture of that market through different lenses, through different angles, so that you can capture that scenery through a different type of approach. So One of the things that I always emphasize when we are going to be talking about time frame analysis or multi-time frame analysis is that we do not want to be suffering from analysis by paralysis, and that's why we should determine our high time frame, our mid time frame, and our entry time frame. Okay, now the way and the the typical predetermined timeframes that I've chosen and that many people are following is, in my case, daily time frame, and then you can actually have the partition of the 6 to 8 hours, so that would be the mid time frame. And then on top of that, I would not recommend going any lower than the 1 hour time frame. The 1 hour time frame, if you can find the time, that would definitely be a very useful one to get those entry signals as part of a breakout strategy. Okay, so that's the first point that needs to be understood. Always analyze the markets through different time scales. If you don't, you are going to be missing out on precious market information, okay? So do not lose sight of the forest for the trees. If you're going to be stuck in just one single time frame, you are not going to be as equipped information-wise as other traders that put in the work, okay? Now, with that being said, next we move into situational awareness. Now, situational awareness essentially is, a fancy term to really understand what's going on in the market that we're looking at. In this case, let's just move back to Solana BTC, okay? So understanding the environment, the conditions of any market at a first quick glance, it is very important because that's going to determine whether or not that is a market that is suitable to take breakouts. Now, a market can be broken down into 4 different categories based on both direction and volatility. We can have a market that is directional and volatile. We can have a market that is directional and non-volatile, or we can have markets that are ranging. And within a sequence of a range, we can have a range that is volatile or a range that is non-volatile. So these are the 4 categories that we can classify markets with. Now, by looking at Solana BTC, and that's typically what I do on my daily scan, I very quickly flick through the charts and I get to understand what are the market conditions on each of these markets. As I go through them, then I get to highlight, I get to outline the ones that might be potentially setting up for a breakout. That is my process when it comes to situational awareness, okay? So Solana BTC, you can clearly see here that we are in a very strong uptrend. Therefore, this is a market that in terms of breakout, in terms of the breakout strategy, would be quite conducive to highlight for potential breakouts. Now, when you're going through this exercise of drawing conclusions as it relates to situation awareness, there's going to be 6 pillars that we touch on so that we can decide the type of market conditions. And the 6 pillars involve structure of the market, momentum or the energy behind that market, volume, volatility, support and resistance, and supply and demand. This is something that for those that are newbies, it's going to take time to wrap their heads around, but trust me, practice makes perfect. And the more that you go through the charts, the more that you're going to get comfortable with all these concepts to the point that it will be second nature. In other words, you're going to be looking at the charts and within 5 to 10 seconds, you will be able to tell whether or not that's a market that has your interest to take breakouts or you want to disregard altogether. What that means, therefore, is that if you have a list of, let's just say, 50 or 100 markets in the crypto space, or let's just say 20 stock indices that you want to go through, you can easily complete the whole list in about 10-15 minutes in the crypto space, or less than 5 minutes in the stock indices. Okay, that's the point. That's the organic evolution that you get to have by practicing these pillars. Now, let me touch on these pillars one by one. Okay, each pillar, as as the name indicates, each pillar represents an important cornerstone that you want to be abiding by. Okay, therefore, you just don't want to be throwing indicators out there and as part of your chart just for the sake of it. You really want that each and every indicator that is placed, in this case in my chart, serves a very specific purpose. Okay, so let's touch first on structure. When it comes to a structure, at the end of the day, it really comes down to noticing whether or not a market is printing higher highs and higher lows, or lower lows and lower highs. And this is a concept that is very much ingrained in the logic of Dow theory. Okay, so Dow theory describes a market that is uptrending with higher highs and higher lows in the price formation, and the opposite is true. Okay, so that's when it comes to structure. Now, for those that are getting started new in my mentor room, we have this indicator down at the bottom that is going to be revealing whether it is a bullish or a bearish market as it relates to structures. Second, we have to analyze momentum. Momentum is energy in motion. Okay, a market is going to be, finding a path of this resistance if it's actually trending till the point that it's just essentially going to be running out of juice. So we want to be capitalizing on that energy, and through the SMT or Smart Money Tracker, we're going to be able to tell that. So if I were to maximize this indicator right here, you will notice that we have both fractals, which refers to structures, and SMT, which refers to momentum. Both that gets to be analyzed through the daily and through the second or mid time frame, in this case the 6 hours. Okay, so you will notice here that Solana BTC right now is showing a mixed bag of the daily still bullish, but it has been cracking structure to the downside of the 6 hours. Okay, we could actually be placing the fractal, but for me to unclutter my charts, I tend to just remove it. But for educational purposes, especially if someone is struggling with the concepts, I'm always going to be placing the fractals, and this is what really determines if we're going to have a green or a red dot here, okay, depending on structure being compromised or not. Next, we've touched on structure, we've touched on momentum. Next up is volume. Okay, now I make a distinction between, is a market finding real money behind, or is a market finding a or commitment, or is a market starting to run out of steam, out of gas? Now for that we have volume. Now, unlike the Forex market where we can analyze a tick volume, in the crypto space we do have centralized exchanges, therefore there is full transparency, especially in the legit exchanges, the likes of Binance, FTX, where this volume is going to be essentially the number of transactions that are going through the books. So we really want to be paying attention to volume and whether or not on these breakouts it is increasing, we are attracting more players, more buyers, or not. Okay, so for the most part you can see that the volume has been rather consistent. Now this third pillar, the volume, is going to be most instrumental when we want to confirm an entry. Okay, not so much when it comes to the situational awareness part. Fourth, we want to understand the volatility of the market. Now, there is a very handy tool that I have been using for a number of years, and that is the BBW. The BBW, it is this second window right here, and if you wonder what the heck this indicator does, in a nutshell, this is an indicator that looks and measures the distance through this black line between the upper and the lower Bollinger Band. Let me see if I got the Bollinger Band here. No, I don't, so I'm just gonna be adding the Bollinger Band real quick to my chart, and I'll give you a quick rundown. So you will notice that the Bollinger Band has been expanding to the upside and is moving towards that same direction on the lower end of this Bollinger Band, okay? Now, whenever we have a big markup in prices, notice that the Bollinger Band tends to expand, and that expansion, in other words, the difference between the upper and the lower band, this is going to be reflected through this black line. So the higher this black line goes, the more expansionary the volatility activity is in this market, okay? Now let me just remove that. So if this black line is high, above this orange line, that tells us that this is a market that is going through a period of volatility expansion. If this black line is below the orange line essentially being a 100 period moving average derived of this black line, if it's below, then we are going through a period of low volatility in the market, okay? So right now, by looking at the daily, we can understand that Solana BTC is going through a period of high volatility of the daily. And that volatility, as I said, it is very well portrayed through this black line, okay? That's element number 4. Element number 5, and here is the crux of the matter and what at the end of the day is, in my personal opinion, most critical for you to really get right the breakout entries, and that is the identification of supports, resistances, supplies, and demand imbalances. Now, a lot of people talk about support and resistance. Is a very common term, but what does it really mean, identifying support and resistance? Okay, we really need to look under the hood, because at the end of the day, support and resistance is just a sexy or fancy or very common term. But how is that being created in the first place? Let's look under the hood, okay? Now, let's look once again into the daily time frame of Solana BTC. This could be any market. We could be looking at the S&P 500. We could be looking at gold, any market, okay? It doesn't matter, because it comes down to price data. That's what we are analyzing. Now, we need to make a distinction. A market can be categorized in terms of the orders that are going through the books as orders that are going to be active type of orders or passive type of orders. Now, under the active type of orders, we have what we call initiated buying or initiated selling. Initiated buying or initiated selling is the orders that are placed at the market. This is also what we call aggressive orders. So if you, as a retail trader, are going to be entering the market with a market order, that makes you an aggressive buyer. You want to rush into the market. You don't have the patience to actually set a limit order, okay? And talking about limit orders, if you're going to be placing that type of order in the market or a stop order, you will become a passive player. You will become a player that is looking to engage in the market in a passive manner, not rushing in, but waiting until the market, until the price comes to your location before you jump the gun and get filled in your position, okay? So, going back to support and resistances. Support and resistance at the end of the day is nothing more than a byproduct of the limit orders that exist in a market, okay? For the price of Solana BTC having peaked at that exact point on August the 18th, here where I got my crosshair, that can only happen if during this eruption of demand, there were limit orders right here, okay? If that is the case, you want to identify that area, okay? Now, when it comes to support and resistance, it's also very important that you put a lot of weight into connecting the locations in the chart where there's been a lot of interactions in the past, okay? Or where there's been a meaningful high or a meaningful low. I personally myself I'll put a lot of weight on the closes of the candles on a daily basis. The close of the candle is something that will be absolutely instrumental. You will notice time and time again that on a closing basis, especially if you can connect different points through different time sequences, that will be very important. Okay, so for the most part, support and resistance is going to refer to the identification of limit orders in the market, whereas if you're thinking about the imbalances of supply and demand, that is going to represent aggressive orders or orders that are entering the market without waiting to be filled. Okay, and we can see here that this run in Solana BTC has been propelled by aggressive orders in the market. For a number of weeks there was consistent buying non-stop that sent the market from 13,000 satoshis or thereabouts all the way to 45,000, and that is a run not too shabby, more than around 200%. Okay, so that's what represents an imbalance of supply and demand. Okay, and that's what really makes this whole notion of the six pillar go full circle. Okay, these are the elements that are going to be allowing us to look at any chart and understand the market conditions that we are facing. Okay, now one of the areas where most newbies are going to be struggling is in properly spotting and marking out these lines of support and resistance. And I'm afraid that there is no exact science that will define what are these, what are going to be these areas, drawn. You have to really train your eye, consistently train your eye day in and day out, and eventually you will get very good at spotting these areas from a top-down analysis. Now, the last point that I want to make as part of the situational awareness is that you want to be marking these areas of support or resistance, these lines, through different colors based on the time frame that these lines are derived from. So what I do personally is I'm going to be marking these lines in red if that is a line that refers to the daily time frame. Now, if that line of support and resistance has not been clearly identified, I cannot really eyeball that line through the daily, but by coming into the 6 hour, I can notice that this was a clear base that got broken, and notice here that got retested. I can tell through this mid time frame that this is going to be representing a level of resistance on the way up, just like this one right here. This is also going to be representing a level of resistance. This is what we typically call in the markets a flip SR. So what used to be support now becomes a resistance, and this is going to be a contentious area where buyers are going to be most likely struggling in the first pass. Okay, so that is that when it comes to the different supports and resistance that can be identified and the colors of it. Now we're getting to the nitty and gritty, and that is we are now going to be interested in shortlisting the markets that can be potentially setting up for breakouts. How do we do that? Well, it comes down, I gotta say, to situational awareness, looking at the daily, making sure that we have identified a market that has transitioned into a range within a bullish context, and then having that market marked out through different labels. So in my opinion, the best way to go is either selecting the market that you're most interested with a different color label, or if you still want to be having this whole list, just place the markets that you're most interested on at the very top, so you always know that those are the ones that you want to be keeping an eye for the next 24 hours or so. So for today, let me give you an example of a market that looks like it wants to break higher and it meets all the conditions. Camera has lost focus. Ludovic. Okay, hopefully that doesn't become too much of an issue. Ludovic. So, ARC BTC. ARC BTC, hopefully a product that will be integrated within Global Prime as part of our expansion into cryptos. ARC BTC, you will notice, and this is again my train of thoughts as I'm looking at the daily, you will notice that this is a market that has been breaking as of late structure. We had a very sticky level of resistance right here. We did break through a massive markup in price. We've retested that, and now for a number of occasions we are struggling at that level. Now, when you're thinking about taking a trade that meets the breakout type criteria, you really want to understand what is the main battleground, where that tug of war between buyers and sellers is occurring. And right here in ARC BTC, you will notice very clearly that we've struggled in several occasions around that high. Now, I always encourage traders that go back in history and understand whether or not that was a level relevant in the past. And notice here that it's not exact, but we did struggle around that point. Through these candles, we definitely overblew that level for quite a margin. Camera losing focus might be due to connection. Okay, so right now we are in a position where ARC BTC could be potentially setting up for a breakout. Now, also, what I like about this market is the following. We are forming what I call a compression type of movement. Notice that also the rejections of this high, we had a rejection that went down towards this previous resistance turn support. The second rejection is finding less committed sellers, and we are once again back at it, looking to retest that level for a third time. That is what I call the art of reading order flow. Okay, order flow at the end of the day is nothing more than the actualized activity of buy and sell side orders in the market, either through the initiated buying or also obviously spotting limit orders that have been placed. Now, this line of resistance of the daily, it is telling us, it is communicating that at this point there are sitting sell side limits. If we see that the price is going to be striking this level and closing beyond with an increased volume candle, that is all we need to see to take this trade. We have structure and momentum in agreement. Notice that the previous candle has a lot of volume behind, over 6 million in volume. So that is actually supporting, that is actually, buy side commitment that has come into this market, but we are not yet, we cannot yet jump the gun and get into this trade until, and this is one of the main criteria before, getting into or getting on board of these trades, we need to see that there's going to be a consumption of these sell side limit orders by closing beyond this line. And also important here, another rule of the strategy is that we want to see that the volume is behind. We do not want to see volume very low. If that is the case, it is statistically proven that there are more chances that we are going to be faked out in this breakout. Okay, so that's ARC BTC. Now we've identified a market that potentially can be stalked for an entry as part of an instrument that is looking rather bullish in terms of structure, momentum. We have the volume behind, volatility. Notice that yes, it has actually been going above the orange line or the mean area, the mean volatility area. But, and this is something that I wanted to touch next, we do not have to be just simply fixated or stuck in the daily. In order for you to front run these entries in lower time frames, you have to shift your focus into lower time frames. If you really want to refine and tweak the entry, it does pay off as long as you, provided that you find a time slot to go into lower time frames, okay? Typically, what I'm gonna be doing is I'm gonna be looking for that confirmation candle either through the 6 hour or the 1 hour time frame, okay? So essentially we have, assuming that we've got the proper read of the market and ARK BTC is gearing up for an eventual breakout, we can visit the 6 hour, and by 6 hour I mean the partition of the daily into 4 by 4, but you can also do that by 3, and then you will be monitoring the 8 hour, depending again on what is most comfortable and most pragmatic for you as a trader. So if I were to see that ARK BTC is going to be breaking this line with increased volume, I would be very interested in this market. Now, something else that I want to mention, and this is part of the 5th category, not just stalking for an entry, but risk position and management. Whenever we have an entry, we have to work out 2 important details. Number 1 is what's going to be our FTA. FTA refers to first traveling area. In the case of ARK BTC, notice that there is not such thing as a first traveling area until this high. There's no pivot points created. There is like no local highs or local lows. There is just simply a big wick, okay? So whenever that happens, for me, as a rule of thumb, it's going to be identifying the 100% projection target. That is the symmetrical target that gets to be calculated by first working out the measure of this box and amplifying this box by its size by 2. So that would be the first traveling area. So once we've identified what would represent our first traveling area, we need to work out the second detail. And the second detail is what I call the E ratio, or the efficiency ratio. So efficiency ratio essentially comes down to, is it smart for us, and will it actually be worthy our capital at risk, the entry? And for that, what we want is, like, let's imagine that we've got that close right there and we've got volume behind. So at this point, we have to make a decision. Do we want to be taking this trade or we don't? And E ratio or efficiency ratio, it's also going to be instrumental to determine if we want to take this position. So we have to work out first what's going to be our stop loss. So to work out our stop loss, there are 2 different types of stop loss placement, what I call conservative one or aggressive one. The aggressive one tends to be first calculating what's going to be the POC. The POC is the price, the point of control, and or in other words, it's the location in the chart where most volume has concentrated, and that actually tends to be an area of a barrier or a support, okay? So if you want to be placing a stop aggressively, you can place it behind the POC. So essentially, this would be your stop loss size. If you want to be more conservative, and I gotta say that in the crypto market, I tend to be more conservative given the volatility and the wiki type of patterns that we see at times, such as this one, you might want to consider this one as your stop loss, which would be placed around there. Just always give a little bit of a buffer. So if we were to place the stop right there, we need to work out what is the ratio in terms of distance between the entry. So let me just clear up. So between the entry right here and the stop loss, and how that relates or compares to the entry to the take profit area. So this would be, sorry, the entry to the FTA, or first traveling area, okay? So imagine that this is the entry to the first traveling area, and that's the distance, and this would be the distance between the entry and the stop loss. So let's work out what's the efficiency ratio here. And this would be a long position. So let's grab this one. Notice that the efficiency ratio is just about 0.55. So whenever that happens, and assuming that you want to be placing your stop around 18% or so below this entry point, this is unacceptable. We want to have an E ratio of at least 0.75. Why is that? Because whenever we have this breakout, we always have to, make an assumption, and that assumption is that the price is going to be traveling towards that first TA, that first traveling area. Now, that may happen or may not happen, but that is our premise, okay? That is our base case. Now, we do not want to be risking our capital for a distance of 0.55 compared to -1. We want to adjust that ratio so that at least it's 0.75. That creates more wiggle room for our price to get that ultimate first traveling area. Therefore, you would be playing around with the entry until, and always the entry has to be nearby that breakout point, okay? Nearby. So you would be playing around with your entry until it meets the minimum threshold of 0.75. Therefore, if we do have this breakout with a spike of volume above the average, then this would be the minimum entry, that would be the stop, and that would be the first traveling area. Now, what does it mean, first traveling area? Well, essentially it comes down to protecting your entry, break even. So if it goes back down against your entry, then you're going to be scratching that trade, okay? So that's essentially what it means. And then it's just a matter of wash, rinse, and repeat, monitoring the number of markets that you are going to be interested in trading. Now, another one for today is DYDX BTC. Notice that this is a new listing in Binance, therefore it is one that is going to be attracting quite a lot of attention. Also, you will also see through the 1 hour that we have a well-defined area of resistance right here, and should this resistance be broken, notice that there is a nice air pocket here that can be exploitable, okay? Remember that as part of the breakouts, we want to have an what we call a exploitative mindset, okay? Remember that in the crypto space especially, the markets are going to be very inefficient, so we just always have to engage with the optimistic also mindset that we are going to be letting, and probabilistic also mindset that we're going to be letting the odds play out. And remember that these scenarios that are going to be acceptable are big wins, small wins, break evens, or small losses. So imagine that in the DYDX we get a breakout by having a market that closes beyond this line of resistance with volume right here increasing. Now, one of my tricks and something that I often reveal to my students in the mentor room is the following. Independent of whether I'll take the trade of the 6 hour or the 1 hour, for me, the 1 hour is very deterministic to cut my losses short. So let's just say that we take this market for a ride long as we obviously, provided that we are breaking this resistance, and we assume that this stop is going to be placed below this low or about, let's just say 23% or so. And so assuming that that gives us a E ratio or efficiency ratio of 0.9 to the previous highs, that would definitely be acceptable. Now, that being said, how do I protect my position so that I can almost always guarantee that if the price or the experiment does not go in my favor, I can cut my losses short? Many times over, this is the type of pattern that evolves if a market is not doing what you would be thinking. And let me just give you an example by simulating what the market might do. So we have the market perking up. It's printing higher lows, and that would be a very good sign. The moment that the market is printing higher lows heading into a resistance, this is something that you want to be very watchful for. And eventually we had the breakout with the volume behind. Now, if that breakout tests that previous resistance turn support, and right here we break back down, to me, and unless there is a very clearly defined area of support in between, like a bunch of local highs, in that case, I might still give it a shot. But if not, then this retest back into the resistance, to me, is a great opportunity to just cut the trade and move on to new pastures, to new opportunities elsewhere. I've given myself an opportunity to take this trade. The market has poked its head one time. It had a second attempt. It never actually, it never flew higher, and we have broken back down the structure. If that is the case, I'm out and I'm looking to cut my trade for a fraction of the loss that I would have taken, okay? Now, some of the examples as of late that you might want to actually look at could be FTT BTC. So FTT BTC, and this was a trade that actually happened right on the, as a backdrop, we had Steve Curry, the celebrated basketball player from the Golden State Warriors. He actually announced that he was partnering with the platform FTX, and FTX, we have a token, the FTT, and right here you if you pay close attention, and this is actually a breakout that was reported in the mentor room, you will notice, let's actually go to the daily so I can actually give you a walk back into this trade. See where it happened. Let's see, right here. Okay. So that was September the 5th. September the 5th. And this was a trade that got confirmed off the 1 hour time frame right here. Okay. So we had a very elongated candle. Notice here, big volume behind. We had 4 candles correcting lower. These candles carried very low volume. That is very corrective on nature. There are no sellers that are going to be involved. Notice that also this correction was testing the previous all-time high in FTX BTC. Okay, so up until this point, we can draw certain conclusions, and that is, this is a market that is trending higher, that it is actually having big volume behind, that is retesting a previous area of resistance, big time macro resistance, now most likely going to be turned support. So we want to go into the lower time frames and identify whether or not there was a consolidation, a range that had been formed. And as we come into the lower time frames, and let me just remove this one because at the time this red line would have not been drawn. At the time, notice that we did have, and it's important here that we train our eye to really come to terms about the proper identification of these levels of support and resistance, in this case resistance. Notice that we had a high, we had a second high, we had a big market movement on the back, exactly synchronized with this news. And what I want to emphasize, and this is something that might be a little more advanced, but if you happen to spot these breakouts at the time that the news are breaking, the chances are that we might have plenty of momentum behind, okay? So we have this candle, it is not quite breaking, but the one that follows through, it is finally breaking, and the volume you can see here was exploding way above the average. So that's our entry right here. We need to then work out what would be the efficiency ratio. So that's the entry, that would be the stop around 9%, and then the previous high comes about 9% as well. So that's a 1-to-1 risk reward. Now, our base case is that we do not want to be taking profits until minimum 2-to-1 risk reward. Now, I want you to pause for a second and think about the maths and the statistics behind. We are always looking being obsessed in cutting our losses short if the trade is not working out in our favor. That means that in very few occasions, at least in my case, and that's what I'm training my students to do, in many occasions we can cut the loss for a fraction of what would have represented a full loss, or minus 1R. Now, when it comes to the collection of profits, we do not want to be collecting profits until at least a 2-to-1 risk reward. So the 2-to-1 risk reward would be the list that we want to collect, okay? So in this case, FTX BTC, notice that the market did travel for almost 4-to-1, and I can actually provide the history behind. So if you actually come to the history right here, you will notice that as part of 3 commas, yesterday I did have a loss in AVAX BTC, but notice here, like, I am cutting my losses pretty sure, like minus $850. But when it comes to the wins, like Ethereum BTC, higher win 1,096, that's what matters. Then the next one, Sol BTC, 1,500. And right here, that's the one that I am emphasizing right now. Case in point, FTT, BTC, 3,000 plus, or like at the end of the day, my unit of account is always going to be BTC. So what matters to me is this profit, 0.06 BTC, okay? So always letting the profits run and cutting your losses short, something that I have been, really hammering home from the very introduction of today's presentation. Okay, so that was a nice trade in FTX BTC, and it was really I guess a double confirmation with the news of Steve Carey securing this crypto deal with the FTX platform, and this one being the token of that platform, which serves as as a token to get incentives, to get a cut in fees and so forth. Okay, so up until this point, I guess that that would kind of like summarize what my routine is like. This is something that obviously can also be applied to other markets, but as I said, these days, if you are going to be trading the Forex market, you are going to be best served if you apply mean reverting type of strategies. Like look at the Swiss franc, Japanese yen. If you are a breakout type trader, this is suicidal. This is a market that you want to be running away from like the plague. It is not ideal to be taking breakouts in such a choppy market. Now, that being said, it is a market that, given the conditions, could be very, very conducive to be a mean reverting trader back and forth whenever we see that there is a deviation with significant volatility away from this mean, which could be the 13 exponential moving average or so forth. You then could be considering a reversion back to that mean. But case in point, so in terms of breakouts, notice that here in the Japanese yen, in the Nikkei 225, the market was clearly having a dispute around this resistance. This resistance actually was very notable through the 6-hour time frame. Notice here how many times that resistance got rejected. If we actually expand that line, also very important, this happened to be the origin of a supply imbalance. Okay, so this would have been a trade that, unless you want to miss it, you have to go down into the 1-hour time frame. And in the 1-hour time frame, right here, you have the explosion in volume. Right here, the explosion of volume at the open of markets in London, which happens to be 3 a.m. My trading default time. Okay, so again, a market that has a lot of connecting points around that level of resistance. It does break through with volume, and it never looks back. It never looks back, and that is what we are always hopeful for, that we are protective of our position and hopeful that the market will not be retesting that entry. We obviously have to allow the traveling of the price towards our first traveling area, and if for whatever reason it doesn't do what we are expecting and it goes back and it starts treating this level of support as resistance once again, just get out, just cut the losses, and then move on to find new trades in the market. Now, as I said, my focus as of this year, for the most part of 2020, I was just kind of more mixing both, but focus this year is completely in cryptos, especially knowing that we're going to be integrating a lot more crypto products into Grow Prime, and this is a huge opportunity also for clients. So be watchful, be on the sidelines waiting for it, because it is going to be phenomenal to have such inefficient markets. And whenever we apply breakout type of strategies in the right environments, we can really, really reap the benefits. And when I'm talking about reaping the benefits, I mean amplitudes of movements that can at times be like doubling up the market valuation in a matter of days. Okay, so if there's any question, please fire away. I've gone for about almost 1 hour, believe it or not. If not, I'm going to be concluding today's presentation. We've gone through a lot. I got 5 minutes if Roger, Ludo, or anyone else got a question. All right, everyone. Nep, my pleasure. I'll be back in coming days. I'll be providing more insights. I'll be doing more live streams. And in the next live streams, I'm actually thinking to let you guys take the floor and let me know the markets that you're most interested, and I can actually be providing my insights, my analysis in situ. So that's something that I think can be workable. Absolutely, Roger. This is a very informative session for sure, and one that you can start to, again, I always recommend disseminate all this information, get comfortable with the selection of your daily markets. It doesn't have to coincide exactly with the markets that I'm trading. Why? Because if you do that, then you're finally embracing the power of independent thinking. Okay, you do not have to always be following in locksteps what I am doing, but rather just go out there, find the markets that resonate with you, and obviously share those markets with me through the mentor room, and I can be providing my 2 cents on the proper analysis of those markets. Okay, and I also again recommend big suggestion to all of you that are not yet at a stage that would render or would justify, would warrant the application of this strategy with real money. Nothing wrong with just trading very, very small percentages with a tiny account and then get better over time. Yeah, sure, Ludovic. If you need more information, you can always reach out to me through Discord, and I'll be happy to. As part of my mentorship course, the very first lesson, it's all about, to me, what I consider to be the most transformational of all, and that is the recognition of where we at in the macro framework, and why crypto is very much the future, and the market that is going to be providing the most opportunities in the years to come, okay? And as Global Prime becomes a multi-asset platform, we're gonna be, as I said, integrating a lot more crypto markets that clients can freely trade. And that is going to be, personally for me, very exciting because, as I said, we are now going through a once in a lifetime conversion of technologies, and that happens to be at a point where we are seeing the real birth of a new asset being embraced and being, I guess, validated by the old guard. Cryptos is here to stay. Roger, if the minimum ratio is 0.75 to 1, how does that work with waiting for a 2 to 1 before taking profits? Because the 0.75 to 1, that is never going to be where you take profits. That is where you are going to be moving your stop to break even, Roger. Don't confuse the terms here. 0.75 to 1, that is the minimum threshold for you to move your stop loss to break even. Okay, your stop loss to the entry order. But that has to obviously be reconciled with not being patient, applying further patience, and not taking profits until there is a 2 to 1 risk reward available. Obviously, and as a discretionary trader, if there is a macro resistance and that happens to be 1.8 or 1.9 to 1 risk reward, then you can always take that profit at that point, or 50% off. It is a each trade presents different market conditions, and you have to adapt accordingly. Okay, so hopefully that makes sense. All right, it's 3 p.m. my local time. Gotta go. Thanks all for attending. It's been a pleasure, and next time I'll definitely let you participate a lot more, you providing and you asking me what markets you'd like me to look into, and we'll do so. Until the next video live stream, is bye from me. Cheers, guys.